HPT live webinar. Today we are going to be breaking down the third week of April. Tough week, very tough week, but overall the primary focus of these webinars once again is to highlight execution, right? Market's going to be all over the place. We got tons of volatility. We have insane amounts of things going on, right? Or external variables causing the market to go up, down, left, right, sideways, all over the place, right? But we cannot control that. What we can control is our edge and our execution. So today in this webinar, we are going to be breaking that down exactly. We're going to be breaking down our edge, how it performed. We're going to be breaking down execution. We're going to be breaking down strengths, weaknesses, and how we can continuously get better. Right? That's the goal of these webinars over here at HPT. So what I'm doing right now is I'm throwing on all the indicators and tools that I use. You can see here, open print, pint numbers, 1 hour 9 DEMA, the exponential moving average, the 50, the 5, the 20, etc. Right? So these are the indicators that I use for anybody interested. And if anybody has any questions about that, just drop comments below. All right, so let's get right to it. Monday was a tough day for me, and we're going to talk about it. Now, the purpose of these webinars is to highlight strengths and weaknesses, right? So to be very clear, what is our job as a day trader? Our job is to execute a strategy that yields results. So to do that, you must first, have a strategy that you've back tested that yields results, right? That's step number one. Step number two is execution. Because if you can follow your strategy that is profitable or fruitful, if you can follow that, you then have consistent profitability. Now, coming into Monday, I did not follow my strategy initially. I took a short play right here. When this candle was red, I took a short play. Price sold off, fell below the 50. We got a moving average cross, but I got no GBI, no green bar ignored. But I rushed it. I rushed it for a few reasons. I wanted to trade off the 50. I wanted to trade off the 20 EMA. Neither of those reasons are a part of my strategy. So what happened? I got stomped out of the trade on this candle. And not only did I get stomped out of the trade, but in these volatile markets, my fill was terrible. I'm sure a lot of traders have been going through this. I bought my contracts. Let me show you. I got it. I posted it in the Discord. I just want to show everybody what actually happened here. If I come to member chat and go way up, where is it? Here. Look at all these members making good money. This right here, you can see, due to potential wide markets or liquidity risk, this order may manually substituted with a limit order upon activation and work until filled. That right there just means you are going to get rocked on your stop loss, potentially, right? So let me show you exactly the fill I got and how terrible it was. I don't want to waste a lot of time on this, but this is something we need to be aware of. I bought my contracts for $1,020, right? One contract. My fill was $290. I took a 70% loss, 71% loss on this. Look at the bottom of the wick. You guys see that? The bottom of this wick, you can't really see it, but it says 290. Right? So I got roasted on this trade. Now, this hit me very hard mentally because I didn't follow my strategy. I rushed it. You can see right here, I rushed it on this red candle. We didn't exactly wipe out the candle before it. I rushed this. I rushed it. If this green bar was ignored, meaning the low of this candle was lower than this candle, then yeah, that would have been my strategy. But it wasn't. I rushed it, and therefore I got stomped out, right? And it's okay. And it just so happened that my fill was horrible. So this really highlighted for me, yet again, the importance of execution, right? So that was trade number one. Trade number two was this nice little long play off the same level, right? You can see here we get back above the 50. We get a red bar, ignored, took a long play into open print. Perfect. Perfect. This is the execution I'm looking for right here. This is the strategy I'm looking for. Didn't get the move I wanted here, but the strategy still performed the way it was supposed to. Then price rejected off the open. We fell back down below the 50. And then we got yet again another beautiful green bar that was ignored right here, giving us a beautiful opportunity for a short play. So just notice here, guys, there's 3 trades that were taken. Which one didn't work for me? The one where my execution was off, right? And this is where I want you guys to learn from my mistake. I rushed my entry here because it was Monday morning. I just wanted to get into the market. It looked so damn good. I rushed it, got stomped out, got a horrible fill. And then I go, okay, what's the next best move on the chessboard to execute my strategy? And that's exactly what we did. Once the strategy presented itself, we got a great long. And then once the strategy presented itself to the downside, we got a great short play. Boom, done. Moral of the story is you are only as good as your ability to follow your strategy. So that was Monday. Tuesday's price action was garbage. Complete trash. It was terrible. It was absolutely terrible. Let's break it down. So open print right here. The strategy, but we don't know it's terrible until it unravels, which is why our approach is so valuable. It's so valuable because if you just wait for it, you won't take any of these trades. I actually took a trade on Tesla, and I'll show you what it looked like. I've been trading Tesla a little bit more. It's a really good tool. Once again, don't be the guy that's just, it just doesn't trade anything else. Like be okay with taking other setups. This was my Tesla long, right? We got moving average cross, red bar ignored, healthy trend. Caught a great move here from like 256 up until 258. Not a huge trade, but I was able to capitalize around 30% ROI. That's a beautiful, beautiful setup, right? With a consistent approach. That's a win. SPY was just terrible. Was just garbage price action all day up until we came back down below open print. And then we got our green bar right here that was ignored. So once again, this strategy still presented and offered us a beautiful setup to the downside, right? I was one and done on Tesla. I didn't take this. But just notice, guys, once again, it's the approach. Open print, end of day. We fall below open. We got the moving average cross right here. This is our strategy. This is what we look to trade, right? Moving average cross, fall below, come up, below open print. Right here we're above open print. Now we're below open print. We retest open print. We get that nice sell-off. So Tuesday, not the best PA, but the strategy still showed up. Wednesday was my all-time favorite day of this week. Let's talk about it. So we're getting a mega sell-off in pre-market, right? Market's just ripping, selling off tremendously. And this yellow line right here is what we call Monday's low, right? So all my followers know how much I love market structure. Market structure is very important to me, right? So let me just get rid of some of these lines so that we can really highlight the importance of market structure right here. So notice, I'll draw a zone around it. This is the infamous break and retest, right? The break and retest is by far my favorite chart pattern because it's market structure to its finest. And structure is how the market speaks to us or communicates to us its feelings or emotions, right? Is it bullish? Is it bearish? Is she in a bad mood, good mood, profitable mood? Or is she just wrecking all retail and trader, right? Market structure is key. So we're rallying into Monday's open. But I am still looking at this through the HPT lens, meaning if I get a moving average cross and a red bar ignored, I will long into Monday's low and target above. Why? Well, that would be because buyers are showing acceptance. Now, until we spot that, we do not go long. On the contrary, until that happens, we remain extremely patient. And we don't make any moves until we get our criteria. Notice there's no moving average cross. So once again, there's no short play for me. No short play to the downside. This does look like a beautiful entry short. It's not a bad trade, right? Right here. But there's no moving average cross. So we have to remember, when all three criteria isn't present, we no longer can lean on our 83% win ratio, right? Execution's key. We need all three to properly take our trade confidently. So I'm patient, I'm staying patient, and then we finally get a nice HPT cross right here, back above open print, right? Red cloud turns green. At the open, red bar gets ignored in long, stop goes right here. I don't care how much it's going to cost. I have to put my stop right here. Otherwise, I'm potentially vulnerable. And look, price came all the way down. Almost tagged it, but didn't tag it. And then we got that rally all the way up into Monday's low. This was a full trade. Absolute smoke show. I think 73% ROI on this trade, locking in around $900 something dollars. Very thankful for this trade. This trade kept me afloat the whole week, right? Because this wasn't the best week. False break above Monday's low, and I'm done for the day. Oh no, I took a short play. I took a short play here, and ended up getting out of the trade on this candle right here, right? So then I caught another small short play right here. I wasn't able to hold through that drastic sell-off off open print. Look at how beautiful that is. I stopped out on the candle before it. You gotta love it. Like, dead serious, guys. You have to love it. You know what I love about trading? Is when I, am in a predicament like this where I take a short play and I end up like making like 10% on it 5 minutes before it sells off. Like, I love that shit. You know why? Because I made a decision not to go red on this trade, right? Because that's what the probabilities tell me. It's best if you're up on a position, never give any of it back. It's just not worth it. And the one time I really stick to my rules and don't let it breathe. My stop was outside the EMA cloud, and it went outside the EMA. It closed outside the EMA cloud, therefore I'm out of the trade. And then it sells off. But you know what this proved to me? That I'm disciplined. I'm a disciplined trader that makes decisions based on probability, not emotion. So that was really good. And then comes Thursday. Thursday, price action was absolutely terrible. I took one loss and was done for the day, and it was right here off the open. Right? This candle was green, and it actually wiped out and ignored this candle. So, therefore, I'm in long right here, and I get stomped out in about 6 minutes. And you know what? I shut my laptop, and I was done for the week. So, what can we take from this week, right? Well, let me pull up the daily. Overall, the market conditions are challenging, but no need to worry. Our strategy, which currently has a 75% win ratio for the month of April, will perform. It has performed over the last 8 months, and even much longer before that, but our high-level summary states that more often than not, our strategy is going to be fruitful. Therefore, going into next week, I will be trading the exact same way. I had 4 losing trades this week. 2 of them was me acting irrationally, breaking character, right? So those were unneeded losses. And then the other 2 was just a result of my edge not being profitable. Now, going into this week, that doesn't mean change the approach. If anything, it means the odds are better in our favor. The law of large numbers states the more data you accumulate, meaning the more trades you take, the more your measurement will present itself. Meaning our 85% win ratio over the last 8 months, let me pull it up, will continue to perform, right? It will continue to perform. Therefore, that is the strategy we are going to take. There's no ifs, ands, or buts. This is what we do. We're currently sitting at a 70% for the month of April, and we have one more week to go. Every month before that, 82, 85, 75, 73. Our lowest has been 73 or 72 in the month of September and October. But once again, we will stick to the data, right? We will focus on execution and we will execute appropriately, right? So guys, I hope you enjoyed this mentorship webinar. This is what we do over here at HPT. Another thing I want to touch on before I hop off here is I'm doing a new study on our high-level summaries, right? You're going to notice here in notes and observations at the 1 hour 9 DEMA. So I'm collecting a lot of data on this, but I found if and when our strategy presents itself and it's at the 1 hour 9, which is this horizontal blue line, I have an indicator that shows us this. This is the 1 hour 9 DEMA, right? So anytime our strategy, the crossover, the RBI, GBI, presents itself at this level, the probability of it going in our favor increases drastically, right? Look, another one. At the blue line, nice follow through. Look at the one before it. Far away from the blue line, right? Here's the blue line, far away, no continuation, right? So this is a new study that is going to benefit hundreds of traders, right? Look, another one. At the blue line, we rally. And then to the downside, at the blue line, we fall down, right? So guys, this is a very fruitful study. I love you guys. Thank you so much for your love, your support. We are going to continuously grow. We are going to finish 2025 strong. If you guys want to get involved, click the links below. You already know what to do. I love you. Peace.